Internal control measure for cash. First, cash receipts should be deposited intact, that is, in the same amount and form as they receive. Second, all disbursements should be authorized and made by check, except those involving small amount, which should be paid from petty cash fund. Third, both receipts and disbursement should be properly accounted for in the records. Fourth, there should be separation of personal duties for receiving cash, recording receipts, depositing cash collection, reconciling bank accounts, authorizing disbursement, and disbursing cash. Fifth, bank reconciliation statement should be prepared monthly. 6. Provide physical protection for cash. 7. Minimize cash on hand in the office. 8. Cash actually present in the office, petty cash, change fund, and undeposited receipts can be periodically counted and compared with company's records. 9. Adopt and press fund for petty cash. Next is substantive audit procedures for cash. Cash balances. Existence. Cash recorded on the books exist. First, count cash in hand. Second, confirm bank balance. Third, examine interbank transfers. Fourth, perform analytical procedures. Completeness. All of the entity's cash is included. Fifth, perform cash cut-off test. 6. Prepare proof of cash. Next, rights and obligations. Any restriction on cash have been identified. 7. Examine standard bank confirmation and read the minutes of the Board of Directors meetings to determine whether any restriction have been placed on cash. Valuation and allocation. Cash is correctly valued. 8. Obtain bank cut-off statement directly from the bank and use them to test the bank reconciliation as of the balance sheet date. Presentation and disclosure. Cash is presented and disclosed properly. 9. Review financial statement and prepare analytical procedures to determine whether accounts are classified and disclosed in accordance with GAAP. Next is cash collection. Completeness. All receipts of cash and checks are recorded. For a sample of days, verify that all cash receipts are recorded by reconciling daily listing of cash receipts and validated deposit tickets to cash receipts journal. Occurrence. Recorded receipts represent actual collection of cash from customers. For a sample of entries in cash receipts journal, trace to the pre-listing of cash receipts and to remittance advice. For a sample of entries, Reconcile daily deposit to validated deposit tickets. Classification. Cash receipts transactions have been recorded in the proper accounts. Review accounts coding for a sample of entries in cash receipts journal. Accuracy or valuation. Debit to cash and credit to accounts receivable are valued at amount received. For a sample of entries in cash receipts journal, examine remittance advice and verify that discount taken was appropriate. Put accounts receivable, subsidiary ledger, and reconcile to general ledger. Last is cash payment. Completeness. All cash payment made are recorded. Reconcile cash payment per books with cash payment per banks. Prepare or test bank reconciliation. Occurrence. Recorded cash payment occurred. Examine paycheck for appropriate endorsement. Examine document underlying payments. Classification. Cash payment transactions have been recorded in the proper accounts. Check accuracy of accounts on invoices by reference to chart of accounts. Valuation, accuracy or valuation. Debit to various accounts and credit to cash are valued at proper amounts. Recalculate invoices paid.